All right, guys, good morning. Welcome to the rodeo. I hope you got your boots tightened, cowboy hat placed firmly on your dome, because the Bronco is a bucking. All right, quick sound check here in the free room, and a quick sound check on the YouTubes. All right, what's up? Here we go. Peter, Kareem, Mirza, Lorna Lee. As always, guys, good to see you. So for starters, hope you had a good weekend. Hope your family's doing well, all that good stuff. But man, where do we begin? Where do we begin? So if you don't trade the futures, you missed out on one heck of a night. So here is your Sunday night in the futures. We'll do an hourly chart, capture the beauty of it all. All right, so they come out swinging. Initial gap up. Your futures are up, 1.5%. I think at the high of the day, or we'll call it the high of the morning, we're up a good 1.6, maybe 1.7%. And now we find ourselves rolling into the open. S&P futures down over 1%, heading back down towards your recent lows. And our lower time frames here are a little bit bloody. 1 hour, 30 minute, all the way down to the 1 minute, popping off that sell signal. So here's the thing, guys. And we'll look at the Qs real quick. I don't imagine they're green. NQ down about 0.6. The Russell 2000. Your little guys are down 2.2, which would make a little bit of sense to my knowledge. Most of the companies banking with, Silicon Valley Bank, I believe they're, publicly traded, unprofitable companies. A lot of them which find their homes in an IWM. So the little guys are down 2, and then the Dow here. Come on, Dow, save us. And the Dow's down 1%. So as the futures are racing back towards the lows from last week, there's a few different ways we could take. Our discussion here this morning, right? We could talk about the banking crisis, so to say, right? And now I'm reading things this morning where, now there's speculation a bank like Charles Schwab, they might be the next ones to kick the bucket. So we could talk about that. We could talk about the economics of it all. One thing I'll never claim to be is an economist. Right? I'll never claim to have really a good grasp at all of the macro side of the game. And frankly, any knowledge I have of that part of our game, the macro side, that just comes from the benefit of having a few smart buddies. So I think instead of focusing on focusing so much on what's going to run the headlines, I think we'll do what we always do, guys, and just focus on the pretty colors. Right? You put aside the news, you put aside the mayhem, you put aside everything happening on Twitter. The charts aren't going to. So if we're on the verge of 2008 part 2, and we're a few months shy of a generational buying opportunity, the charts are going to communicate that, and they're not going to lie to you. So I think what we'll do, as always, is just take it from top to bottom. Right, who owns control of the monthly chart all the way down to something like a 5-minute chart? Right, pretty colors will not lie. So starting on the very top of the mountain, the monthly chart. Nothing bullish about your monthly chart. We, of course, had the big COVID rally, right? The big old ripper. And ever since, we've pulled back and just kind of reached this point of exhaustion. So I want you to focus down here on the MACD histogram. All right, so we get hit with COVID. The world gets turned upside down. We're all masking it up. And then here comes Jay Powell, and the bulls get a fresh tank of gas. Right, fresh source of bullish momentum on your monthly MACD. And with that gas tank intact, right, they're pumping it. And then we, just about a year ago, that gas tank runs empty. So it's all bigger picture stuff, but your monthly uptrend that took you out of your COVID bottom, that ran out of gas just about a year ago. And now you're hanging out under a 21, and there's nothing overly bullish about it. All right, so from the top of the mountain, what we can take from a monthly chart is just exhaustion of that previous trend. We're not bullish anymore. We don't got buy signals. We're not screaming bearish. I think we're going to be pretty soon, but we don't have sell signals. We're not breaking out under a 50. This just looks like a previous trend that's kind of died out. So then you take it down a notch, right? Who's got control here of a weekly chart? And we can do this on the futures, right? All right, well, who owns the weekly chart? Well, now the bears own it. The bulls gave it a good shot. Momentum goes positive. And they pump it. They kind of held the pullback. They pumped it. They didn't really change all that much. Right? We're not trending back above previous swing highs. We're not really getting a ripping up trend going. Pulled back, and then last week all the problems start. You lose your 21, you lose your 50, and now heading into this week's session, we got a weekly sell signal. And to make matters worse, we got a weekly sell signal inside of a weekly squeeze. So now, right now on this weekly chart, two things are coming together. Right? One of them being compression. Oops. Let me get my drawing tool here. Right, now we've got compression, right? SQZ. And what do we know about compression? Right, compression, aka the squeeze. It's a buildup of energy. Now you visualize that as the market, just ran a marathon. Now it's taking a bit of a break to catch its breath. Right, putting down a couple carbs, pounding on the Gatorade. It's gearing up for that next meaningful move. Generally speaking, and this is true from time frame to time frame, the price action inside of a squeeze, it's all a little bit meaningless. Right? We're going higher, we're going lower, but ultimately we're going nowhere. Where you get these bigger directional moves is on the other end of that squeeze. Right? Compression and then expansion. So the whole name of the game here, and I think make this one time frame a huge part of your focus over the next few weeks. The name of the game right now is what are we doing inside of this phase of compression? Right? Our momentum, our structure, is it all leaning a little bit bullish, or is it leaning a bit more bearish? And those are the clues that we have for now as far as, hey, when the squeeze fires, well, there's a better probability it fires to the upside or to the downside. So that, of course, is the significance of the sell signal. Tells us inside the weekly squeeze during this phase of compression, momentum is bearish. So now the bears get a brand new gas tank. In your structure, under the 50, under the 21, that's also bearish. So for the next week, 2 weeks, 4 weeks, 5+ weeks, it's a probabilities game. This weekly squeeze is eventually going to fire. I feel pretty confident saying that. I hope not, right? We're probably not going to be in a weekly squeeze for the rest of 2023. All right, this compression at some point is going to resolve. That's where we got to focus on the pretty colors. Right? Don't even read too much into the news. Don't even get too much caught up in that part of the game. Right? The indicators aren't going to lie. So you can point fingers towards the Fed. We can point fingers towards Silicon Valley Bank. What I'm going to point fingers towards right now, as far as big problems the market faces, is a weekly squeeze of the sell signal. And where this all becomes, I think, nasty is if we take out that 200 SMA, and then we're firing a weekly squeeze short with virtually nothing left to save the market. I don't think the bounce you made back here at 3,500, I don't think it's going to save the market again. So that's my only focus right now, right? As it relates to my trading and the trading that I want to do with you guys. Weekly squeeze, sell signal. So for now, the probabilities point towards that eventually fires short. And then if you continue to take it down the ladder, your daily chart is, guys, if they can't get this back above, and give them credit, they tried this morning. So a valiant effort. But if they can't get this thing back above the line in the sand here, back above your 200 SMA, it's done. All right, just structurally, trend-wise, momentum-wise, game over. Unless they can get that short squeeze back above 39.50. And even that doesn't fix all the problems. So now we find ourselves in a weekly squeeze building up all kinds of bearish momentum. And now our daily chart has nothing to stand on. Right? Sam would call the moving averages your momentum support, right? Your trend support. Well, yeah, in an uptrend, we should hold the 21. Now, if we can't hold that, it's okay if we pull back to a 50. But man, if you can't hold the 50, you better hold that 200. Otherwise, they've got nothing to stand on. Well, now they've got nothing to stand on. And now if I pull up a 5-minute chart up here on our big 3 labels, they got full dominance heading into this week. From a weekly chart, it's going to be more than a 5-minute, right? From a weekly chart all the way down to a 3-minute, momentum, structure, trend, it all works in the favor of the bears. So that makes our jobs pretty easy. Short every single bounce, short every single rally until proven wrong. In the short term, where am I proven wrong? For now, it would be a move back above the daily 200. So that's it, guys. Right, crazy shit happened in the news. You get in the runs on the banks, all big stuff. But as far as our trading game goes, let's just keep it that simple. Nothing about a monthly chart says we're going higher. If anything, you're just seeing your previous trend continue to die. Right, die in a slow, painful, boring death. A notch under your monthly trend, you get a big kahuna. Bearish weekly squeeze. And again, if this puppy takes out that 200, I think it's over. But even that is another $150 lower. So take that concept of trend support. The only trend support you have left on a weekly chart since this time last year is your 200. Right, the bulls can keep the hopes alive. Hey guys, we're still in an uptrend if they can hold the weekly 200. We lose that. Things could get nasty. So keep it simple, guys. Right, monthly chart is showing big exhaustion of one of the craziest rallies we'll ever have the pleasure of living through. Your weekly chart is in the compression phase, and right now it all points towards the bears win that fight. Your daily chart has lost anything it had to stand on. As far as where it should have held up if they bulls really got something. And then, it goes without saying, you take it down to a 1-hour chart, and everything's just pretty bombed out here. So now if you take all that information and it becomes a discipline game. When the market, when the bell opens up here in 30 minutes, am I going to blindly buy puts? Are we going to get all gung-ho? Sell calls, buy puts, just, short everything under the sun? No, not really. You still want to fight for a good entry. So in terms of risk versus reward, and again, this is just a game plan I'm trying to work, I want to short any bounce so long as we're still trading under that daily 200 SMA. And I think my downside potential here as far as reward, I mean, it could be a lot. Put it that way. It could be a lot. So now in terms of working the best risk versus reward possible, game of patience. Try to wait for a bounce that allows me to short close enough to that 200 to work a really good risk versus reward in comparison to the flush I'm trying to catch. So for conversation's sake, say our first short, we're trying to short this thing down to 3,800. And at 3,800, we'll take our profits, we'll pay ourselves, then we'll reevaluate. Well, if that's the case, I probably don't want to get short at 3,820 with my exit above the daily 200. Yeah, I might catch my $20 flush, or I might catch, what's that, 100 plus points on the chin. So have your level where you're wrong. And I think for now that's going to be your daily 200. So paint that red. Sake of conversation, say our first target is 3,800. So paint that green. All I'm trying to do here for the next few days is be patient enough to try to put that short on closer to that 200 as opposed to closer to my downside target. If I can short it at 3,900, all right, then on the S&Ps, I'll risk 50-ish to the upside, maybe catch 100 plus to the downside. Right, basic stuff, but I say that to say, have a game plan going into today. As bearish as things look, as bad as the narrative might be, we've seen this game before. Market opens, everyone and their mama panics and gets short. You could see a huge short squeeze today. Might not change anything. Doesn't mean it's going to be an enjoyable ride. So work that discipline, have a game plan. In the short term, I'm wrong. Back above 39.50. So we'll see what they got, guys, and then keep watching your pieces of the puzzle. And I think the one you probably lean into the most right now would be HYG. And if that doesn't show signs of trying to stop the bleeding, probably another indication you want to short every single rally. But that's what I got for you guys. And my focus right now is going to be pretty much exclusively on the S&Ps. I really don't think we're in a market where, run the scans, try to find the honey badger, the needle in the haystack. I don't think that game's going to work. Now, I might be a little bit biased, of course. But let me show you guys this. Here's what I mean. Where you be? All right, so to me, this is a prime example of my stock pick doesn't matter. My scan results don't matter, and dare I say it, my buy signals might not even matter until the S&Ps can clean up all these problems. So last week on Thursday, here comes AMAT. And for me, guys, I can't find a better setup. Like, I literally can't find anything I would rather get long. For me, in my playbook, that's a definition of like picture perfect. In a daily squeeze, with buy signals on a weekly chart, a daily, a 4-hour, a 1 hour, a 30-minute, a 15, a 5, a 3, all the way down to the 1. I can't ask for anything better. Momentum, structure, from head to toe, everything aligned for a push higher. So we jump in. And initially, right, AMAT's off to the races. We got a little bit of open profit. And then what happens? At the high of day, the stock was up almost 2% on Thursday. I believe it finished the day down flat. What happens the next morning? Right. All of my reasons for taking that trade on Thursday disappeared. They killed the daily buy signal. We wake up to an hourly sell signal. We woke up to a 30-minute sell signal. All right, Thursday evening from top to bottom, everything aligned for a push higher. Friday morning, 2 minutes after the open, from a 1-minute chart up to a daily chart, all of a sudden everything aligned for a move lower. Now, am I biased? Maybe. I'm going to tend to like anything that has the buy signal that I created on every time frame. But the point I'm trying to make is, you can do everything right. Find the A+ setup, pull the trigger where you should pull the trigger. If the market is not supportive of moves to the upside, it's just not going to work. So it's not an AMAT thing, right? AMAT didn't get downgraded. There wasn't bad news about applied materials. The S&Ps just fell apart. And when the S&Ps fell apart, down goes your Apple. Down goes the strongest of the strong, NVIDIA. AMD got clapped. Until you can look at the S&P 500 and say, man, this kind of looks like AMAT on Thursday. Be really careful playing this market to the upside, even if the stock you find is perfectly aligned for a push higher. Think of certain environments that we get into where the S&Ps and the Qs look like applied materials. Their weekly charts are bullish. Their daily charts are bullish. We got squeezes. Like everything is just perfect. Now, a little bit tongue-in-cheek, right? But in that kind of market, you can kind of wake up and just get long. Run a scan, find a decent setup. Yeah, I'll pull the trigger. All right, this market's so strong. The market is just so aligned for a push higher. I can just about buy anything and make out pretty well. We're in the opposite of that market right now, where even the best in show probably can't fight that fight. Now, the same rules apply to the downside, right? Amazon might be teeing up this morning for the perfect short. From a daily chart all the way down to your 1 minute chart, this thing's just cranking out a bunch of sell signals. Well, might look like a perfect short. You might even get the perfect entry, but if the S&P start triggering some short squeeze, right, Amazon's going to fly higher. So I think just putting your focus on the market itself will make our jobs a little bit easier. Right? If the S&P's rolled over, there goes your Qs. There goes the Dow, IWM, financial stocks. There goes everything. If we short squeeze and rally for 2 weeks, well, of course Amazon's going to rally. AMD, Google, the bank stocks. So keep most of your focus here. I think additionally, keep a close eye on HYG. And then just remember that golden rule. As goes the mother duck, goes the ducklings. So mama duck being the S&Ps here, that's pretty much going to be my focus as far as what I observe and, frankly, what I trade. Should capture it all in one basket. But all right, guys, that's my spiel. Right, I didn't want to give you spooky stories this morning, so I figured we'll just focus on the not so pretty colors right now. Though, if you got short on Friday, and these colors are a thing of beauty. So for those of you in the mastery, and then for those of you in the small account mastery, I'll be filling in this week for Cody. But right now, guys, we're in cash. All right, we got out of AMAT for a loss, and we took our profits on our S&P short on Friday. So we sit in cashola, ready to pounce at the first sign of a dead cat bounce. But all right, my friends. Again, respectfully, I don't think they matter. And I'm saying that for myself as well. Like my charts, my stock picks don't matter. But if you got a few names you want to look at, as always, more than happy to take a peek, see what you got, and then we'll roll into the open here. Ready for battle. Ready for battle. And then I guess just one more note, kind of things I was thinking about this morning on my morning drive. And this is all just conversation amongst friends, right? And I think there should be a big part of us that doesn't really care where the market goes. Right? Just give us something to trade. We're here to make money. With that being said, conversation amongst friends. If we look up a month, 2 months, 4, 5, 6 months from now, and some massive bloodbath has ensued, be ready to capitalize. You kind of look at generational wealth or people who have really done well. There tends to be this theme where a lot of that money was made on the other end of collapse, right? On the other end of destruction. So I think for all of us, probably a good time to be focused, be dialed into our craft. Again, I've got no clue where we go, so just talking with my friends here. But this thing collapses. Let's do everything we can to make as much as possible on the way down. Then be in a position and be disciplined, be patient to start taking advantage on the other end. Once the dust starts to settle, all right, you can take that mindset to the equities market. You could take that mindset to the real estate market, the vehicle market. Now, in a perfect world, if I could take out my magic wand, the market would collapse. I and we would get semi-rich on the way down. Maybe real estate collapses. Maybe we turn around, buy a couple properties. All the possibilities. But the pretty colors will not lie. So things to keep in mind. Yeah, Kareem Cody is with his wife and his kids this week. He's earning some major dad points this week. He sent Sam and I a couple of pictures yesterday. He's it's like a campground of sorts. Looked pretty cool though. His kids looked happy. So the Cody man will be back next week. Again, Mike V. This is all like this is all stuff I'm seeing on Twitter. But I was seeing a few things on Twitter earlier where if I can find it, I'll show you guys. But something about the short of it is Charles Schwab could be in trouble. That was pretty much the gist of the article. If I can find something, I'll share it with you guys later. But if Charles Schwab gaps up, 20 points this morning and is pumping out a bunch of sweet buy signals, what's the ticker for Schwab? God, did it get delisted? Schwab, where are you? There we go. Imagine it's already gone. Man. So let's see. Pre-market, we're at. Jeez. And again, not my area of expertise. Like my whole grasp on this situation is where this is troublesome. It's not going to be for us regular folk, right? Folks like us, we're generally, most of us probably have less than 250 grand sitting in a checking account. Like where this all gets wild is I was reading over the weekend. I think it was Roku. Roku had like 20-ish% of their cash with Silicon Valley Bank. All right, now it seems like they're going to get bailed out, whatever the case may be. But yeah, won't be dull, guys. Won't be dull. Maybe take a couple of crisp hundos out of the ATM later. Hey, what's up, SR? Yeah, Jam or Schwab. Yeah, I believe Schwab owns Thinkorswim. I believe that is the case. Yeah, Kareem, that's it. Jellystone. Yep. Yeah, Roku, 26%. I mean, I wish we could all hang out and have like a beer later tonight because I feel like interesting things to discuss. And none of this has anything to do with our trading plan. But now assume Silicon Valley is quote unquote they get bailed out. They're not on the line for all the uninsured depositors, like anybody over 250. Well, I mean, I could just see that triggering some reckless behavior in the future. Yeah, we can lend out shitty loans. Yeah, we can take risky investments with other people's capital. All right, crap hits the fan. It's all right. We won't really be on the line. All kinds of stuff. Yeah, LT, pretty calm weekend. Just your typical Sunday night futures. Yeah, nothing to see here. We're up 2%. We're down almost 2. We're bouncing. We're flushing. So, like I said, guys, have your cowboy boots on this week. You're gonna need them. You're gonna need them. But all right, guys, I will cut you off here. I gotta jump into. I'll probably jump into the options room right now. So for those of you in the gold room, I will see y'all in a few minutes. And for the rest of you here in the free room, quick peek into my schedule. I should be back later today. Perfect. So I'll be back here today at 2 p.m. Eastern, 1 p.m. Central. So we'll get to see how the cookie crumbles, and then we'll come back and reevaluate. So guys, I hope you have a great day. For those of you in my mastery, I shall keep y'all updated, but that is the game plan. Wait for a decent bounce. So long as we're under that daily 200, short it. Initial target here, and that's not even the real target. 3,800, like at a minimum. So in other words, get short where we're a move down to 3,800 would pay you a little bit more than your exit on a move back above the 200. Alrighty. And then for those of you folks in the small account mastery, I'll be hitting y'all with a few updates today, and then I'm sure we'll sneak in a couple of live sessions later this week. So go get them, guys. Talk to you later.